All right, good morning, guys. It's about half six in the UK AM. Just doing some pre-market analysis, and we've been looking at this. We've been looking at the New Zealand dollar, and you can see we bounced off of this recent resistance level. We pushed up, tested that resistance level, and we've bounced off. You can see we pushed down and then we broke this low. Okay, so we've seen some relief here as we drop down to the trading time frames. We was looking at this level and we saw that market was running out of steam. We were no longer putting in new highs. Okay, we rolled over and we broke and violated this low. I was looking down on the 60 for a reason to get short this pair. You can see we had our double top up here. Okay, followed by low, low, break of the low, and I was looking for areas to short the market. And the first area I'm going to look at is this previous structure support level. Okay, so we know support should become resistance, so we're going to take a closer look at how we might be able to get involved here this morning. So we've got first up, previous structure, good old support becomes resistance. Okay, should become resistance. Second thing I'm going to do is bring on an equal measured move. So if we bring on our ABCD tool here, you're going to see that lines up in that zone as well. So we've got an equal measured move. And what I'm going to do is I'm going to try and build out as much confluence as possible in this zone. And the next thing I'm going to do is bring on some fibs. So I'm going to bring on the Fib retracement tool and just go from this high down to the low. You can see we've got a 618 retracement lining up perfectly there. Let's just remove some of these unwanted ratios. Keep it nice and clean. So we've got a 618 retracement. We've also, what we can also do is bring on our Fib extension and use it as an inversion. And this is what we call a Fib Inversion Trade setup. You can see we've got a 1618 lining up in that zone as well. And this is known as a Fib Inversion Trade setup. This is actual strategy that we've tested and verified, and we teach this on the Ultimate Trader Transformation course. So we've actually got this zone up here has now got a Fibonacci inversion trade setup. So those Fibonacci inversion traders, you're going to be entering aggressively up here at a 1618, and I'll go through the targets in just a sec. And lastly, I'm just going to bring on a Fib extension tool and just use it as a traditional extension from swing low to swing high. You see we've got a 1414 lining up in that area as well. So we've got a nice little fib cluster. We've got an equal measured move. We've got previous structure support should become resistance. Okay. So let's go through a couple of options and see how we can handle this trade. Now, I'm going to talk about the fib inversion first. Conventionally, the fib inversion targets are set at a 618 retracement. Okay, so we know that the fib inversion targets will be going down at this level here. Okay, down at 72.21, and we also know that the stop loss for a fib inversion, the risk on a fib inversion, it's always a 2-to-1. So we want to build out where we see that 2-to-1 risk reward, and then that becomes our risk. Okay, so that's the first style of entry I'm going to go through, which is the fib inversion trade. For all you fib inversion traders, I know lots of you have learnt this strategy and you're having a lot of success with it. And some of you look to take two targets, and some of you even shoot for target ones that are retested lows when you're in a trend continuation trading situation like this. But there's the fib inversion. Now the second approach would be a traditional trend continuation. So depending on where your stop loss is, your reward will increase dramatically because you'll be shooting for retest of the lows. And there's a few things you can do. There's a few places you can place your stop loss. One is being above this structure level. Now we had the non-farm spike out on Friday, which you may or may not choose to ignore, but if your stops are going to go above structure, then you're going to get more of a 1-to-1 risk reward on this because your stop loss will obviously have to be up here. However, you may decide to drop down to a lower time frame and wait for a double top entry. And if you can get a double top entry, then your stop loss could then go an ATR, maybe use an ATR based stop or a conventional 10 or 20 pip stop loss above the double top, because you've essentially created your structure via the double top. You've put in initial test, you've put in a second test, you've got structure, you put your stop loss above structure, and then instead of taking targets like the Fibonacci Inversion Trade, you're shooting for a retest of the lows, so you've got an awesome risk reward. You can see it's just over a 3-to-1 risk reward here. So a few ways to enter. I'll certainly be keeping my eye on this. We've had a great week in the market so far. We called a counter trend move on the dollar yen last night as well, which played out. So yeah, we'll be looking at this in this morning's live room. I'll see you there.